the capital from the 20th century is going to flow into the 21st century. People are going to sell gold and they're going to buy digital gold. They're going to sell antiquated real estates and aged apartment buildings and natural gas fields, and they're going to sell soybeans or whatever in Siberia, and they're going to buy 21st century assets. And that means Bitcoin, among other things. And then capital in foreign nations is going to flow toward the West, and it's going to, capital will flow from the East to the West, and it'll flow from Europe to the US. And the only reason it doesn't is because we don't make it easy for the money to move. And the way to make it easy, embrace Bitcoin, and anybody can buy Bitcoin anywhere on the world. There's 15,000 crypto on-ramps, and you can do it peer-to-peer. So embrace Bitcoin, and that is a capital network that the United States would own and benefit from. And all of the capital from your enemies and all foreign capital and all antiquated capital and all inefficient, thermodynamically unsound capital, it would all flow into the Bitcoin network. And if we issued that digital currency, that stable coin, then all of the world currencies would immediately swap to the dollar for all except for their next 4 weeks of cash flows, because everybody wants the dollar everywhere outside the US. And so this is an example of leading through a digital assets framework, right? And the two most important digital assets in the world are digital currency in the form of the dollar and digital capital in the form of Bitcoin. And the Trump trade is, I just swap, I swap the gold for the Bitcoin and I make $80 trillion in the trade, and I catapult the United States to worldwide economic dominance for the next 100 years.
But given how many people in the US hold gold, what do you think the odds are that he'll actually do that?
The gold is the last twist. The reason to sell the gold is because foreign central banks and the competitor to Bitcoin over the long term is gold. So the entire trade becomes free, and it becomes geopolitically wise, because not only do you enrich yourself with an extra 100 trillion, but you also bankrupt your enemy's banks. So that's why you should do it. But will they do it? Maybe not. But the fallback would be you keep the gold. By the way, gold's getting demonetized whether you like it or not. Like, I will just say, gold is failing as a capital asset. It'll either fail because a nation state puts a stake in the heart of it, or it'll fail because the free market's going to short sell it. I mean, every rational investor that holds gold is going to dump the gold to buy Bitcoin every year. So it's going to be demonetized no matter what. So the reason to sell it is because it's a bad investment and it's happening anyway. But let's say that they don't. Well, you just use $600 billion of US dollars or borrow $600 billion to do it. It still becomes effectively a free transaction. You're going to borrow 600 billion and you're going to pay off 40 trillion, or you're going to make 60 to 80 trillion. So it's a pretty obvious swap, even with just currency.
And would you be perfectly happy to see them inflate the money supply to do it?
Yeah, as I said, I mean, if you're buying the Bitcoin before it goes up by a factor of 100, it's not inflation, it's accretion. Right? You could spend $1 trillion to buy the Bitcoin and make 100 trillion, and it's 100-to-1 gain. So if you look at the history of the U.S., we actually bought Louisiana from Napoleon. I think it was like whatever, 12 or $15 million. We bought Alaska from the Russians for $6 million. We bought California from the Mexicans for $12 million. There was inflation to do that, or they just paid with a check or currency. They were all good investments. New York was bought, but what, 60 guilders or something, nothing. Yeah, so I think that the point I'd really make is you as an individual ought to borrow money against your house and buy Bitcoin. If you're borrowing the money at 6% or 3% and investing it at 30 to 60%, it's a good idea for you. If you could sell 10% of the equity in Impact Theory, the corporation, at a fair value, I would say inflate your equity, sell 10% of your stock, buy Bitcoin with it, because Bitcoin's going up 30 to 60% a year. In the worst case, you'll have diversified. In the best case, you'll actually grow faster. And the first nation to print money, the first nation to print their own currency to buy Bitcoin wins, right? Like, Tom, look what MicroStrategy did. We basically issue our own currency, our stock, and we buy Bitcoin. What happened? We went from $1 billion to $100 billion market cap is what happened. Is it inflation? It's only inflation if you print the currency to invest, to make a bad investment, right? If you print the currency to buy something that's appreciating faster than your inflation rate, it's actually accretion, right? So the hurdle rate is the 7%. And the problem generally is most governments print the currency to make a poor investment instead of printing the currency to make a good investment. And that's why they can't get out of their hole.
When you look at the hole that we've dug for ourselves and adding $1 trillion every 100 days to the debt, do you see this as like a no-brainer way to get out of that?
Yeah, I do, because you want to grow your way out. You don't want to tax your way out. Austerity isn't a good idea. Tax isn't a good idea. What is this, the way you get out? Well, if we create 1 billion robots and 1 billion AIs, and they all do the work, smarter, faster, stronger, cheaper by a factor of 1 million, then that's probably good for the economy, right? I mean, you're going to harness digital technology, and that's going to help us grow our way out. If you remember what I said at the beginning of the podcast, and I said it's a 10 to 15 trillion dollar entropic lapse every year due to physical and financial capital. So you're saying, how are we going to pay off a 30 or 40 trillion dollar debt? What I'm saying is, I have a network that's worth trillions of dollars a year, maybe 10 trillion a year. And so if you actually install the network, it's worth $10 trillion a year to the human race. How long does it take running a thing worth $10 trillion a year to pay off a $40 trillion bill? It's like, what I'm coming back to is you have a problem, and I invent a modern fusion reactor, a pocket fusion reactor that will run for 1 million years and give you infinite power, from a bottle of water. And I offer it to you. And you're like, no, I'd rather just tax everybody to death. Like, I think that if you're smart, you figure out, we'll just take a few of these, and this is how we're going to grow our way out of our problem. And I'm offering you the same thing, a crypto reactor. And I'm saying the solution to our economic problem is harness technology to generate trillions of dollars of economic value a year. The conventional thing that everybody understands is creating $1 trillion worth of new products and services that didn't exist before, right? That's I got to produce more candy bars, more cars, more planes, more trains, more travel, more concerts, more buildings, more houses, more. That's conventional. That's the P&L side. Robots and AI will help with that. But the unconventional, the monetary, the economic side, the very deep paradigm shifting idea is, here's my idea. Eliminate the toxic capital from the civilization that's destroying $10 trillion a year worth of products and services. The average life expectancy of a human was like 30 when we drank dirty water, and we had dirty food, and we had dirty air, and we had dirty blood, and we had doctors with dirty instruments, and everybody's just dying. And you can't grow your way out of that with a better factory. But if I come along and say, This is clean water. Give this to your kids. They won't die. Okay. It's the taking away of the germs from the food and the water that makes you live twice as long. Bitcoin is about taking away the germs, right? The toxins from the capital of the civilization, right? When
And
you
what do
see
you
a
think is the
crumbling
most
building,
devastatingly, okay, is that, I was going to ask what the most devastatingly bad capital is.
it's just all imperfect, right? Like every hyperinflating economy. Go to Africa and ask, why are they poor? They're poor because all the capital is toxic. What about the Weimar Republic? What happens when the capital collapses? Okay, the government collapses. What happens next? Nazi Germany. What happens next? World War II. Okay, 100 million people eventually die, right? So the crumbling capital creates a crumbling civilization. Every single civilization for 10,000 years, everyone in recorded history, has as one of its root causes, the capital crumbles, the monetary system collapses, and then what happens is they can't feed everybody. So then what happens is the people complain, so the soldiers kill them. Then what happens? Well, eventually you can't pay the soldiers, and the soldiers mutiny because they're not being paid. And then what happens? The people that pay their soldiers come over your border and defeat you. And then the historians write, oh yeah, the barbarians came and they toppled our civilization due to no fault of our own. But the fault was the capital crumbles because everybody would rather have a piece of cyber Manhattan. They would all rather be in the US. They'd all rather have the high quality property, but they can't buy it. They can't physically. It's illegal do you know it's illegal in Nigeria for you to hold dollars?
I did not.
There's a lot of countries, it's illegal in China for you to trade in US stocks or buy dollars. So there are a lot of places you can figure it's probably illegal in Russia too. Right? I think most places in the world, they have capital controls, and the capital controls can range from you can't take your money out of the country to you can't even hold those foreign assets.
And do you think that Tether or something like that lets them get around those regulations?
That's why Tether is successful today. The reason that Tether is $100 billion plus network is because people want dollars so bad, they're willing to buy it from a company that isn't public, that isn't a bank, because they want the dollar, right? If Tether were allowed to incorporate in the U.S. and operate in the U.S., it would probably go from $100 billion to $1 trillion network in a hurry.